So let me ask you this. Why did Nvidia just pump a massive amount of capital into a laser company called Coherent, right after investing in its biggest rival, Lumentum? I mean, on the surface, it's like Ford funding General Motors. It makes absolutely no sense. But trust me, this single move is the key to unlocking the entire AI hardware puzzle.
And that's what we're breaking down today. This is the story of Coherent, the final mission-critical piece of hardware needed to unleash NVIDIA's whole AI ecosystem. And it all starts with a $2 billion deal that's about to kick off a massive photonics supercycle.
All right, here's our game plan. First, we're going to unpack NVIDIA's big $2 billion puzzle and the AI data bottleneck that's holding everything back. Then, we'll dive deep into Coherent's two major technical moats and their supply chain strategy. And finally, we'll weigh the big risks before giving you our final StoxCompare verdict. Let's get into it. Okay, so let's start with the catalyst for all of this, NVIDIA's $2 billion move. You have to understand this isn't just a friendly investment. Think of it more like a strategic ultimatum. It's a command. Now, the real genius here is in the structure of the deal. This is not your typical venture capital play. NVIDIA is essentially prepaying $2 billion to lock down future production capacity for its next-gen Blackwell and Rubin GPUs. It's kind of like a shadow financing move, where that cash is specifically earmarked to expand manufacturing right here in the US and to supercharge R&D. Basically, NVIDIA is making damn sure its future isn't going to get choked by networking delays. So, why such a massive, almost desperate-sounding move? Well, it's because NVIDIA has slammed into a physical wall. See, you can build the most powerful chips on the planet, but all that power is completely useless if you can't move data in and out fast enough. The old-school copper wires we've been using, they just can't keep up anymore. And that, right there, is the AI data bottleneck. And get this, the market for solving this one problem is absolutely colossal. We're talking about a serviceable addressable market, what we call the SAM, of over $21 billion by 2028. That's the sheer scale of the opportunity we're looking at here. So why is this market just exploding? Well, it comes down to two big things. First, something called co-packaged optics. The old way was like plugging a bunch of slow, clunky extension cords into your GPU. This new way, it's like building the power outlets, the optics, right onto the chip itself. It's way faster, and it's going to be mandatory for future GPUs. Second, you have optical circuit switching. This replaces these power-hungry electronic traffic cops with pure laser highways, which just slashes latency. And Coherent, they are absolutely central to making both of these things happen. Now, you don't just walk in and capture a market that big. You need a serious defensible edge. Scaling this kind of technology is incredibly difficult, but Coherent has two really powerful technical moats that make it pretty much indispensable to a company like Nvidia. Moat number one is all about a material called Indium Phosphide, or INP for short. These are the little laser engines that power high-speed data. Now, Coherent's big edge here is its jump from tiny 3-inch wafers to massive 6-inch wafers. This isn't just a small step up, it's a huge leap in semiconductor manufacturing. It literally doubles their output from a single wafer, which is critical for meeting NVIDIA's insane demand, and it also expands their gross margins, so more profit from every single wafer. The second mode is a hidden variable that I think the market is totally overlooking, the thermal wall. AI data centers generate so much heat they are literally at risk of melting down. It's a huge problem. Coherent's proprietary cooling tech called thermodite provides this radical heat dissipation that solves the crisis. By the way, if you want to stay ahead of this AI infrastructure supercycle, do me a favor and smash that like button and subscribe for more deep dives just like this one. You know, this whole story isn't just about cool tech, it's also about geopolitics. With all the rising tensions between the US and China, NVIDIA's investment is really about building a fortress supply chain right here at home. And here's the crucial point. NVIDIA cannot, and I mean cannot, let some kind of shock in the South China Sea derail the multi-trillion-dollar AI revolution. Supply chain sovereignty isn't a nice-to-have anymore. It's mandatory. So by funding Coherent's expansion in the US, NVIDIA is effectively decoupling its most critical production from those Asian vulnerabilities. It turns Coherent from just another vendor into a protected, strategic US asset. And that, my friends, brings us right back to that mystery we started with. Why fund two direct rivals? Well, it's a classic corporate strategy called dual sourcing game theory. By funding both, NVIDIA guarantees it has redundant capacity. There's no single point of failure. But it also forces Coherent and Lumentum to compete hard on price, which ensures this whole optical supercycle happens on Nvidia's timeline and on its terms. Pretty smart, right? Okay, so the bull case is clearly powerful, no doubt about it. But now we have to step into the danger zone and talk about the risks because, let me tell you, they are significant. Just look at this chart. The stock is up a staggering 350% in a single year, absolutely crushing the NASDAQ. Now, what this tells us is that the market sees the exact story we just laid out, and it is aggressively priced in absolute total perfection. There is literally zero room for error here.
So, I see 3 key risks you need to be aware of. First up is execution risk. That 6-inch wafer transition, it's brutally difficult science. Any delay is going to bottleneck Nvidia's entire roadmap, and that would be catastrophic for the stock. Second, you've got valuation risk. A PE ratio over 300 is, well, it's insane. It means all the good news and then some is already baked into the price. And third, the balance sheet. They're carrying nearly $4 billion in corporate debt, and that leaves them very little room to maneuver if there's a downturn.
So what we've got is a situation with a technologically superior company that is also facing some very real, very significant risks. Let's move on to our final verdict and see how Coherent stacks up against its main competitor. All right, here is the head-to-head breakdown. Coherent is the clear technology leader, no question. It has those unique moats in indium phosphide and thermite. Lumentum, on the other hand, has also secured that parallel funding from Nvidia. And, this is crucial, it offers a much more attractive entry point based on its valuation today. So, I've got to ask you, are you Team Lumentum or Team Coherent? Drop your pick in the comments below. I want to know what you think.
And that brings us to our final call. Let me be perfectly clear. Coherent is, without a doubt, the superior technological asset for the next decade of AI. But, and this is a really big but, Lumentum offers a better risk-to-reward ratio for anyone looking to put new capital to work today. That valuation for Coherent is just too stretched right now.
So our official StoxCompare verdict is that Lumentum represents the better value at this moment. For Coherent, the prudent move is to stay patient and wait for a significant pullback. The technology is undeniable, but the price has to be right. Now, if you want to expand your own research, head over to our Substack for our full financial models. Follow us on Twitter/X for daily chart updates, and connect with us on LinkedIn for deep industry insights. So, that leaves the final question for you to answer. After seeing all the data, where do you put your capital? Do you bet on the undisputed tech leader, even with that hazardous entry point? Or do you play it a little safer and opt for the better value today? Your choice really defines your entire strategy for this AI supercycle.